If you are planning to build long-term wealth in 2026 and are ready to take calculated risks for higher growth, small-cap mutual funds can be a powerful investment option. Small-cap funds primarily invest in companies that rank lower in market capitalization, but have strong potential to grow rapidly over time. In a fast-growing economy like India, small-cap companies often benefit the most from economic expansion, innovation, and rising consumption. However, along with high return potential comes high volatility. That's why selecting the right small-cap fund for 2026 requires careful consideration of performance consistency, fund management quality, portfolio strategy, and risk control mechanisms. One of the most talked about funds in this category is Nippon India Small Cap Fund. It is widely recognized for its strong long-term track record and diversified portfolio approach. The fund follows an aggressive growth-oriented strategy, investing in emerging businesses with scalable models. Over the years, it has delivered impressive returns during bullish market cycles. While it may experience sharper corrections during market downturns, investors with a long-term horizon of 7 to 10 years may find it suitable for wealth creation. Another strong contender is SBI Small Cap Fund. This fund is known for its disciplined investment process and relatively balanced risk management. The fund management team focuses on fundamentally strong companies with sustainable earnings growth. It has demonstrated resilience during volatile market phases, making it appealing to investors who want exposure to small caps, but with a slightly structured and risk-aware approach. For 2026, it remains one of the top choices among retail investors. HDFC Small Cap Fund is another noteworthy option. Backed by a strong research-driven investment framework, this fund aims to identify quality businesses with long-term growth potential. HDFC's investment philosophy emphasizes structured stock selection and long-term value creation. Investors who prefer established asset management companies and a systematic investment process may find this fund suitable for their portfolio in 2026. In addition, Axis Small Cap Fund deserves attention. The fund focuses on high-quality businesses with strong management teams and healthy balance sheets. It typically avoids over-diversification and prefers a concentrated portfolio of high-conviction stocks. While this approach can sometimes result in short-term performance fluctuations, it may deliver solid returns over the long run if the selected companies perform well. Another promising option is Kotak Small Cap Fund. This fund blends growth and value investing styles, aiming to identify undervalued small cap companies with the potential to become mid-cap leaders in the future. With India's economic outlook remaining optimistic in 2026, driven by manufacturing growth, digital transformation, and infrastructure development, such funds could benefit from early-stage corporate expansion. That said, it is important to understand that small-cap funds are inherently volatile. Market corrections of 20 to 30% are not uncommon in this category. Therefore, investors should ideally maintain a minimum investment horizon of 5 to 10 years. Systematic investment plans, SIPs, can be an effective strategy as they help average out market volatility and promote disciplined investing through rupee cost averaging. Asset allocation is equally crucial. Financial experts generally recommend limiting small cap exposure to around 10 to 20% of your overall investment portfolio, depending on your risk tolerance. Before allocating money to high-risk funds, ensure that you have an emergency fund and adequate insurance coverage in place. Regular portfolio reviews, at least once a year, are also essential to evaluate whether the fund continues to outperform its benchmark and peer group consistently. Looking ahead to 2026, the broader economic environment appears supportive for small cap growth. India's expanding GDP, Policy reforms, increasing domestic consumption, and technological innovation could create opportunities for emerging businesses. However, global factors such as interest rate movements, inflation trends, and geopolitical uncertainties may also impact market performance. Hence, thorough research and possibly consultation with a financial advisor are advisable before making investment decisions. In conclusion, small-cap funds offer significant wealth creation potential, but demand patience, discipline, and risk tolerance. The funds discussed above have demonstrated strong performance histories and robust investment processes, making them worthy of consideration in 2026. By aligning your investment horizon with your financial goals and maintaining a diversified portfolio, you can harness the growth potential of small-cap funds while managing risk effectively.